You were live.
Great. So, welcome everybody. What we're going to do is we're going to review a 10K live. So, our premium subscribers on our Discord server voted on a particular stock. So, it's DigitalOcean, DOCN, and they wanted us to cover this. So, what we thought we'd do is cover it in a live stream so that you can see how we analyze companies. Now, just some full disclosure here. So, I think once I pulled this up on Yahoo Finance a long time ago, but I can't remember a single thing about this. I have no idea what they do or anything about them. Wyatt does have some knowledge about this company, and I think that's going to be useful because then we won't get completely lost. So the first thing we want to do is try to find their 10K. So you can filter here. Okay, so the 10KA, my understanding is that those are just amendments for the original 10K, though this date is interesting here. I don't know anything about this, Wyatt, in terms
Yeah,
of...
they had some accounting, I guess, corrections that they wanted to
Okay.
do, which, never good. But it actually, they understated some metrics.
Okay.
So,
Well, that's interesting. That's great that you know that. So
yeah.
I've always thought on these amendments, what would be cool is if you're able to do a diff, right? In the coding world, you could do a command line diff and see the differences between these two. That'd be super interesting, right? They should allow you to do that. There should be a diff button here, but I'm going to click that 2023. So that was January, February. The idea here is that looking at a 10Q is really a watered down version of their financials, and the 10K will always have a lot more information, typically have a lot more. So just because it's out of date by coming up on a year now doesn't really matter when you're trying to figure out what a company does. Would you agree with that, Wyatt?
Yeah, absolutely.
Okay, so I always just go to Yahoo Finance, and honestly, I'll just click this 5-year, and I just want to see, okay, this is, somewhat interesting, right? So it looks like, do you know if that's when they had an IPO? Or we could max, I guess, here and see. Okay, max. I'm presuming then here they had an IPO in March 2021.
Yep. And they were a traditional IPO, not a SPAC or anything.
Okay, so it's a smaller company, but it's above our $1 billion cutoff. So I like to scroll down and then take a quick look at this. Is just the most basic. Finally, they got strong revenue growth, right? And then when it comes to earnings, we always we're more interested in cash flows than earnings because you can doctor that stuff up. And then I think here at the bottom, I look here. Okay, let's see. This is the first time we get to see what Digital Holdings operates a cloud computing platform. So that's nice and vague. On-demand infrastructure and platform tools for developers, compute storage networking. So a Cloudflare sort of thing. I don't know. Cloud computing is interesting because we like that theme, but we also know that cloud computing is massive. So it's unlikely that a $2.3 billion company is a leader, right? So that's the first thing, is we invest in leaders. So that's something that we want to consider there. So I'm just going to go down, Wyatt, I guess, and just start reading through this.
Yeah, absolutely.
Our mission is to simplify cloud computing so builders and businesses can spend more time creating software that changes the world. Okay. Let's see. Okay, so 60. So I don't know that using our platform, build, deploy, and scale. Okay, so here's something interesting, right? So they have 677,000 customers. That's the universe. 129,000 paying between $50 and $500 a month. So we refer to as builders. So these people aren't hardly paying anything. If you're paying that much, it's likely on a credit card, right?
Mm-hmm.
And the idea there is these are, so see, SMBs, small to medium-sized businesses. These are the first ones to take a hit when there's a recession. So you're not exactly locking in your customers with a $50 a month payment, right?
Yep.
So then we've got 150. So that's interesting. So what does that mean? Can we do the math there? So does that mean that if we subtract 129,000 and 15,000 from 677,000, those are people using the platform and not paying anything? That's what I'd assume, right?
Yeah, I think that's fair.
Okay, so that's a freemium offering then, maybe. So 15,000 customers paying more than $500 a month. That's just not a lot, man. When you're doing B2B software, the more sticky solutions are going to have some sort of a line to the C level in terms of the decision making, and that's usually based on the amount of money, right? So most firms will have some sort of rule that says, let's say if you're going to spend more than 10K a year, you need a signature at the, well, that's what our rule was. Well, it would depend on recessions as well. So you're not getting access to decision makers at a $500 a month charge, right? So not overly attractive. But we don't know what that looks like, what their biggest customers are. I suppose we want to see if they have large customers accounting for more than 10% of revenue. So companies always put that in. So far, that's, I guess, that's my take so far. Thoughts, Wyatt, on that?
Yeah, no, I think that's all accurate. From my understanding, yeah, like you said, their primary niche is here's my friend here. Their primary niche is SMBs. From my understanding, they're a lower cost alternative to Amazon Web Services, Google Cloud.
Really? Okay, so they're a lower cost alternative to hyperscalers.
Yep.
Wow. Okay.
Yeah. So they have they've got 13, I think something like 13 data centers all over the globe, and they are essentially offering infrastructure as a service. So they're selling out access to these data centers.
So the immediate question is what's keeping Amazon or Google or anybody else from becoming low cost? And maybe the answer is that that they're trying to capture everything because when you have clients this small, man, it's a pain in the ass. They're paying you $50 a month, but you got to give them the same support as somebody that's paying you $100,000 a month. It's more time than it's worth. So I'd be curious. I don't know that we've ever looked at Amazon or Google Cloud. We don't use those. We use a hosting service that utilizes Google Cloud. So we kind of have a buffer. Just always these types of companies that do IT stuff, they're sometimes quite difficult to figure out what they're actually doing. And I like to put it in the context of our needs, Wyatt, right? So we use cloud compute, but it's through a hosting provider. So we don't actually interact with those cloud firms. But I don't think you can go to Amazon cloud computing and put in your credit card. Maybe you can actually with them. Maybe you can. I don't know. Right. Maybe you can't. And it's all contact us for enterprise sales stuff. So maybe there's, an accessibility thing there that's in play. I was just looking here. It says, what is this IaaS? Platform as a service. Okay.
IaaS is that infrastructure as a service. So that's,
which is comprised of computing, storage, and network, and PaaS. What's PaaS?
That's platform.
Platform as a service. See, too much as a service stuff here.
All the buzzwords.
Yeah, it's two of the largest and fastest growing markets across. IaaS and PaaS for less than, okay, that's kind of interesting. That sounds like a lot, right? So this infrastructure as a service and platform as a service for individuals and companies with less than 500 employees. Again, not going to be very resilient. Is expected to grow from so let's say 100 billion this year to 200 billion in 2026, representing a 25% compounded annual growth rate. I wonder what maybe Wyatt, have some idea what the domain of companies targeting small to medium sized businesses for cloud computing, competing with hyperscalers. There's got to be a bigger one out there, right? Not than these guys.
I think, I mean, I don't know what the barriers to entry are. I mean, every time you search DigitalOcean, they've got one competitor. I think it's called Vulture.
Oh, really? Okay.
That always pops up. They say, "Hey, ditch DigitalOcean, join Vulture." So I know that there's definitely people who are.
Okay.
So.
Okay. Okay. We have a highly efficient self-service customer acquisition model, targeted sales force. So that's go directly to. Direct to consumer. Okay, this is interesting. Spread out across over 190 countries, so all the countries in the world, supposedly.
Yeah, they've got data centers in, I think, Europe. They've got some in Singapore. They've got a few across the U.S., New York, California. So
okay, says 2/3 of our revenue has historically come from customers located outside the U.S. That's great, right? Because then they're going to have some diversification there. If there's a problem in the U.S. with the recession, well, was it when the U.S. gets a cold? When the U.S. sneezes, the world catches a cold, sort of thing, right?
I haven't heard that. I like that.
Well, they say that typically about China, which is better, more appropriate, but it's also the U.S., right? So growing our builders and scalers. So scalers, right, is a critical focus. Okay, so we have these same, is this the same numbers? Okay, now we're getting something. So they up from approximately 8,000 builders. Okay, so there you're getting your tiers, right? Okay. That's pretty strong growth, eh?
It's definitely so. Like you said, I mean, their customers don't fare as well in a recession, and they've seen the slowdown in growth. I think their year over year was like 16%, as opposed to
Oh, really?
30. So it's, I mean, they're getting hit with it too.
Okay.
The good old macroeconomic headwinds.
Yeah.
Yeah.
Okay, cool. Look at this. Our net dollar retention is increased from 103% in 2020 to 113 in 2021 to 115 in 2022. I wonder what it is in 2023.
Yeah. It's interesting because they're not really a purely a SaaS firm either, because I think they derive most of it from infrastructure, from their droplets, they call it, platform. So yeah.
What is that?
Droplets, that's their it's, I guess, a way for developers can set up a remote IP address to one of these, computers hiding in a data center somewhere, and you can sort of scale the size of your
A
droplets.
container on a server.
Yep.
Do you think this is just developers purchasing this then?
Yeah, I mean, I think it's got to be. I think their whole thing, their shtick is that they want to be easy to use, customer friendly. So I'm sure that there's some people out there who might not necessarily be developers who just kind of can tinker around and figure it out. But yeah, I'd say developers are going to be the main target.
Just quick housekeeping, Wyatt. What time do we start this?
Yeah, we start around maybe 6:15 Eastern.
Okay, so we're going to run this for about an hour if we even need that much time, just for everybody that's on the call. So let's see. What is this telling us? Higher spend. Okay, so wait a minute. A recent Cloudways acquisition added a significant number of higher spend customers due to the higher price point of its managed hosting offering. So I know that term managed hosting from here at Nanalyze. That's just relates, that's what we're on, right, as a managed hosting offering. But I'm curious here. We had approximately 144,000 higher spend up from, so is that 144,000? Was that the 127 plus 15?
Let's see. That would make sense.
Yeah, that would make sense, right?
Yep.
Yeah. So, well, that's weird, because if they're referring to that collection as higher, and we know that the bottom of that was 50, that means you can spend less than $50 with these people.
Yeah. I think.
So another way of putting this is 15% of their revenue comes from people paying less than $50 a month.
Yeah.
All right.
Like you said, that's probably a service nightmare when those people.
Well, yeah, it is. But also what's nice about that is because it's so small, it's funny. We always joke about people starting their business, right? They spend all their time designing the logo and coming up with a company name, and then they get the domain. And I think it was Elon Musk said one time, then they're stuck with that cost, because if they stop paying the domain renewal, they admit to themselves their startup was a failure, right? Yep. So they keep paying. So similar situation, maybe people that it's such a small amount of money, it's like, well, I'm going to keep paying it because I just haven't got my startup off the ground yet. And then of course it'll sit that way for the rest of their lives, right? The difference between an idea and a company is execution. It's really difficult.
Yeah, I like that.
We acquired Cloudways in the third quarter of 2022. What do you know anything about that? Google why you want to Google that? And
yeah, I'll Google it. They added another acquisition recently too that I need to learn more about. So
there's an interesting idea. If the current space is really disparate and these guys are going to be an aggregator, right? Mm-hmm. And then they just start eating up. I would imagine it's pretty disparate. And that goes to the question again, if we carved out the cloud spending on, I guess we're talking about cloud, not cloud tools, actual cloud. The
Mhm.
hyperscalers get, everybody down to SMB, so they got to be dabbling in SMBs, and then there's some cutoff, and then the rest of that going down in terms of that the size of the customer then goes to these guys and who else, right? So it'd be interesting to know.
Right. Yeah, I'm looking into so Cloudways and then Paperspace was the other more recent acquisition.
Okay. Those
About
are just
building.
startups. I mean, there's nothing big there, nothing, because when a company acquires startups, I haven't found personally it very useful to spend a lot of time digging into that. It's either a big name that we
Yep.
can know something about, or it's just a bunch of little companies, right?
Yep.
Okay, so initial product was the Droplet. So it launched in 2012, a virtual machine that provides. Question, Wyatt, do you know if there's any, and I don't know that there would be, is there any sort of Gartner quadrant or any quadrant you see maybe run these guys who did DigitalOcean, Gartner, and Google and see if they're on some sort of quadrant that might show us who their competitors are?
Sure. Yeah, maybe
That's what Gartners are more useful than showing the positioning because they jump around, right? Depends on
yep.
who's paying Gartner money.
Yeah, maybe
There's been that
cloud
accusation made, huh?
Yeah. Maybe like a cloud infrastructure,
Something like that, yeah.
Yeah, let's see. I'll hunt around for a second.
All right. So I'm just looking here. This infrastructure as a service, Droplets, as you said, are our core compute offering. Spin up virtual machines, so kind of like VMware, I suppose. Basic droplets, dedicated droplets. Okay. Storage solutions to quickly access our CDN, so that's content delivery network. So we use Cloudflare as our CDN, and that just helps serve up our content, our written content, which is the majority of what we do, helps serve that up faster to people that are reading it. They use SSD, of course, disk images of droplets for backups, introduce performance upgrades to spaces and volumes. So we kind of understand what they're doing here.
Oh, we got a comment here from Redbeard. He says, "I'm trying to start a freelance web design business, and actually did look into DigitalOcean for a bit." He says, "I'd say it's kind of like a fancier, more savvy GoDaddy or HostGator." That's interesting.
Awesome, man. That's very useful. So I
Mhm.
was wondering, I wonder if Redbeard, if you know about Kinsta, that's who we use as a
Mhm.
platform. They're in that same niche. But yeah, that's interesting. So I bet it's like I bet it's hosting with a lot more flexibility for developer types. Because most of these hosting companies, they want to just service people that don't have the technical know-how. They just want to keep it simple, right? Like
Yeah.
Kinsta, we could do a lot with it, but here we go. Look at this. No material customer concentration. Wow. Top 25 customers made up 10, 10, and 9. So there you go, right? So that's interesting. Well, you'd almost expect that because they have so many customers that they don't have any big customers, right? Which is a
Right.
good thing and a bad thing, right?
True.
ARPU, so you just wonder, so that's what average revenue per user, something people like to throw around. You just wonder, like, how are you getting people to spend more on this platform? Because, look at us, Wyatt. We have our subscriptions, right? And I suppose we spend more as we grow because
Yeah.
that's just consumption of resources. So if you're growing, I mean, that's good.
Yep.
But how else are you going to increase spend? We're not going to, it's not like add-on services. It's only if you're growing, right? For
Yes.
these types of offerings,
Yep.
you're gonna spend more if you're growing. If you're not, you're definitely not gonna spend more, but you may not stop spending too. You may, I guess, downsize. I don't know.
Yeah. They're definitely a pay for what you need kind of service, which
Yeah,
could
it's
either
good
be a
and bad, right?
yeah. I
That's
was
one of
just
the
gonna
things
say a blessing or a curse. Yeah.
I liked about Snowflake was the fact that they had a business model based on consumption, and that's
Yep.
awesome because if that's the case, which it is, then the growth of data is directly tied to their growth. That's how they achieve such spectacular growth as opposed to just a contract, right?
Yes.
I was going to ask you something and I was just trying to jog my memory here.
Yeah.
Um,
I did find a magic quadrant for
okay.
but they're not on there. So I found cloud infrastructure and platform services. And yeah, they don't have many. This is from June of 2022. So I don't know if there's a more recent one. I'm looking for it, but it's just got AWS, Microsoft, and Google in the leaders. And the niche players, we have Tencent, IBM, and then the visionaries, we have Alibaba and Oracle. So yeah, DigitalOcean isn't on here at all.
Yeah.
I'd be interested to see if there's a newer version or something, but yeah, I can't find them in a Magic Quadrant.
I'm just going to comment quickly here because I can't help myself, but firms that are growing like this shouldn't be pledging 1% of anything to social impact initiatives. You make the money, well, I'll figure out the charities that I want to donate to, right? So that I don't like that sort of thing.
Exactly.
I've never been a big fan of that. Employee ambassador program, that's great. How about the employees focus on working? So let's see, DigitalOcean, risk factor. So I suppose we haven't talked much about the 10K, but this has been useful, right? So far, we've kind of got an idea of what they do in our minds. If we were gonna, so I suppose we can pause before we go through risks, Wyatt, and just sort of take inventory. So if we were gonna invest, so we like cloud computing, right? There's going to be $1 trillion in spend in the next 10 years, or what we've all seen the numbers. Yeah. We have cloud computing exposure in our portfolio, but we wouldn't be opposed to having more of it. The point to make here would be that if we were looking at if we were looking at cloud computing of this type, we'd probably want to go with a hyperscaler, maybe like we'd want to, maybe if you look at Amazon, Google, Microsoft, I think in the case of Amazon, and we did a piece on hyperscalers. I know it's not easy to pull up. Maybe in the future, as we're doing this, we're learning how to do it better. But maybe in the future, we could easily be able to pull up articles we've done. We did a piece on hyperscalers, and we looked at Amazon is actually making all their money from cloud computing. It's crazy, right? It's not intuitive, I don't think. So if you were, so there you go. So you could look at Amazon's revenues and say, well, and that's what we typically look at for exposure, right? To see what exposure we're getting. But for a mature company, you might want to switch from revenues to profits, right? Because that's what's paying the bills. So for Amazon, all their profits are coming from cloud computing. So that's a pretty good way to play cloud computing, right?
Yes.
So you've got a hyperscaler. We looked at this. We did a series of pieces on this. Remember that, Wyatt? We looked at hyperscalers. We looked at data centers for cloud computing. That was a pretty big one. Doesn't look good at all. You could read that piece. It just wasn't appealing. What else do we look at? We looked at the pick and shovels. So we looked at SSD drives, right?
Yes.
Pure Storage.
Pure Storage.
Pure Storage. That's a good company.
Yep.
Liked the way that their business model was progressing. It's not a company. I mean, you can look at these pieces and see the conclusions that we reach. So when people ask questions about various companies, the first thing I do is, did we write something? We probably did. What did we say? Well, it hasn't changed likely, because when we publish research, we try to make it very topical. And what's the term, Wyatt, for something that doesn't change over time?
Evergreen, right?
Evergreen. Thank you. Evergreen. So, our opinions change slowly over time. So I think you'd have to see what we said about Pure Storage, and then that probably hasn't changed. But go ahead.
Oh, no, I was just going to agree with that.
Okay. So yeah, I think that for DigitalOcean and what exposure you're getting, what do we know so far? If you're bullish on small to medium business cloud spend, which everybody's migrating to the cloud, so there's a reason to be, then this would be an option. Though I think we still don't have a good understanding of who they're competing most with in their niche. Maybe they say, well, let's see here.
So I'd be curious if that vulture is listed.
Well, we can do a Control F vulture.
And it's VULTR.
Yeah, look at man. Examples in the category include OVH Cloud, Vulture, and Heroku.
There you go.
Well, here, cool. So what did we miss that? I missed that. Haha, I was talking too much. So let's read that. Where is it? Here we go. Let's see. Large, diversified. There we go. Primary vendors, there they are, right? Amazon, Microsoft, Google, IBM, and Oracle.
Yep.
IBM and Oracle to a much lesser
Oh, yeah.
extent. The three large hyperscalers are Google, Microsoft, Amazon. Google
Their
Cloud.
website here claims that they're 50% cheaper than the hyperscalers. So I kind of want to dig into that and see where
Yeah,
yeah,
that's interesting. But how easy is it for
right.
hyperscalers? And they may not even want to deal with that, right?
That's
How
what I'm
easy is it for them
wondering.
just
Yep.
to lower their prices?
Yep.
I mean, those, if anybody can compete on price, it's those guys, right? So
Exactly. Yeah.
I don't know what. So we got. So what did they call these? They say smaller and or niche cloud service providers that typically target individuals and smaller business. There you go. So that's okay. Now, question why what so I like to do sometimes is if you put DigitalOcean, OVH Cloud, Vulture, and Heroku in Google and just press enter,
Okay.
what that'll usually do is surface some piece where somebody had listed all those, or you can, do just
Yeah.
the three or whatever. See if somebody did a comparison. It's always great to leverage the hard work of others and then give them a quick shout and put your name on it. That's what we learned in B school.
We had another comment because I don't think you're
No,
monitoring.
I can't see comments.
Okay,
We'll
cool.
have
Yeah,
to
I
work
got
on
you. Binge says between Azure, AWS, and Google Cloud, there's not much room left. It's a game of scale. They have no moat. I feel like that's. I would be inclined to agree with that for the most
Yeah,
part.
totally.
Yeah.
And I suppose the fact that they've grown so fast
Mhm.
is because is it blue ocean? I guess if maybe I wonder if they're I wonder where the Kinstas of the world fit in. Like, where do the
Yeah.
hosting companies fit in?
Yeah.
Are they just like what we use a firm like this, of course, right? But we don't have a development team. We outsource development. So,
Yeah.
that's interesting. Okay. I would
It is.
tend to totally agree with that comment as well.
Yeah. So definitely a
Okay.
niche company.
Yeah. So I
Uh,
was just going to look at risks. Go ahead.
Sure. Yeah, I searched those three companies: the OVH, Cloud, Vulture, DigitalOcean. Honestly, not too much comes up, so maybe I'll after this.
No,
I'll
that's
kind of
fine, man. I just
hunt
like, no,
around.
that's totally cool. These are
Yeah.
just little ideas that these are just things I like to do when I'm looking through these things.
Yeah. See what if they have any competitive
Yeah,
advantages.
sometimes you'll see somebody, does a piece or, looks like we initiated a restructuring plan, the result, a RIF, reduction in force, February 2023. Everybody's doing that. So these risk section is usually pretty long, and I guess I skim it like I'm doing right here. This really long. Let's see. This stuff isn't that exciting. So just when we're reviewing this, you look at there's another comment there about competitors. The markets in which we participate are competitive, no doubt. I'm trying to do this as slow as I as I work in the real world, but also I'm cognizant of people's interest in the presentation here. So I just there isn't a ton of stuff in this section, to be honest. Sometimes you'll come up with a gem and you'll be like, wow, I didn't know that.
Yep.
But for the most part, this is just canned stuff that there's something. In November 2021, we issued 1.5 billion aggregate principal amount of 0% convertible senior notes due 2026 in a private placement. So Wyatt, do you want to look at their, I suppose, if you want to pull that, just see, is their debt, then just say that's all the debt they have is this 1.5 billion. Just see if it's still outstanding.
Yeah, it is still outstanding. Let me see if they have anything else because their balance sheet is a little ugly at the moment. So their most recent quarter, they had 1.8 billion in total debt, with cash of about 400 million. They're not. I don't think they're burning cash anymore. I think they are.
Okay, yeah,
free
let's
cash flow positive.
Well, so let's look at that super quick since we're talking about. I like to seriously just look. Yahoo Finance is kind of shite sometimes, no doubt, but we need a place that we can go, that everybody else can go easily to look at the same things.
Yes.
Okay. And we have some data companies out there that ping me every once in a while. Joe, are you ready to talk about? And I'm like, look, maybe, but first of all, you need to have a pretty, it needs to be a very notable brand. So you're not going to go away after we change over, right? And we used to use Google's finance. And then we switched to Bloomberg, and Bloomberg put up a paywall. We probably still have problems with that in terms of some of our links. And now we're using Yahoo Finance. What I like about it is just real, like we said when the start of this presentation, I just looked here and I learned a bunch of stuff pretty simply, right?
Yeah.
So this, I always like this. Now look at this pisses me off, man. These guys have now, this is what's going on at Yahoo Finance. So if you want to be a contender, you got to just do the basic stuff. And this is just incompetency that you're seeing now because firms are focused on bullshit instead of execution. This is a pretty rampant problem across Yahoo Finance that needs to be fixed. No data points. They're just missing. So what you have to do is don't look there. You look here, financials. This is usually accurate. Here you go. So what's interesting here is that we can then go to, so first of all, I like to just eyeball this real quick, the gross profit, right? Gross profit as an indicator of future potential. But here, click cash flows, and then I just look at it annual and quarterly. Well, that looks pretty good, right? And we can look quarterly. That looks pretty good. So they're positive operating cash flows. That means that $400 million in cash is going to grow more or less, right? Unless they're reinvesting back in the business. So we'd have to take a closer look before we could say that. But then if we go to the balance sheet here, like Wyatt was talking about, we can, total assets, current assets, cash. So here's, maybe, let's go to quarterly because that's at the annual. Okay, look at that. There we go. So that's what there was a difference between what I was observing and what Wyatt said. Now you can see, 380. Was that what you're seeing, Wyatt? Non-current, is that goodwill? Yeah, okay. And net PP, what property, something and equipment? What is that?
I should know that. Here, let me.
I should know that too. It's funny how they just drill this stuff into you and you forget it so quick. Whatever, right? It's assets. Goodwill.
Property, plant, and equipment. There it is.
Thank you, sir. Thank you, sir. That's right. So that's what, probably servers in this case, I think.
Definitely.
Not that it matters.
Data centers.
Yeah. So, debt. Non-current. Okay, this is kind of cool. So, and I'm probably going to mess this up. No, I think it's correct. Current liabilities, anything that they have to worry about in under a year. Is that right? I think in accounting. And then that's the difference between current and non-current. So long-term debt will typically be, and I just wonder if that note is going to be due in under a year, if then they move that to there. I'm not sure. I haven't seen that.
We'll keep an eye on that.
Yeah. 1.475. So is that, it's always super cool to see this. Look at, on the quarterly basis, the interest accruing. Well, it's 0%. So why the hell is the interest accruing on it? 1.468, 1.470, 1.472. Look at that slow increase. Maybe there's something, I don't know what that is, but that's roughly, it's roughly what it said, right? That 1.5. So then the conversion, I always hate this stuff, Wyatt, because it starts to get a little confusing anyways. But my understanding is when they go to convert that, for a convertible note, there's a price per share. And if it's above what they indicated in that note, if the current price is above that, then obviously you'd take shares instead of the money. That's what these companies are betting on. And and at that point in time, they dilute existing shareholders.
Yes. Yep.
Okay.
That's how I understand it.
So in 2026, one of two things is going to happen, and we can look at the conversion. I mean, it's interesting to know, I think, but honestly, I most of the time I see these conversion notes, they're always more than what the share price is currently, which is kind of a problem because then you got to come up with the money. So they'll probably roll that over, right?
Yes.
In which case, it's probably not going to be 0%.
Definitely not.
So 3 years from now, they got to worry about that. But if they can keep increasing cash flows, revenues growing at such a rate, then maybe they can handle that. So let's see. Just going back to the risks. What's their gross margins?
I want to say 60s. I should know this because I looked into it, but let's see.
Just because that's something I always
like margin 63, let's call it.
All right. So that's reasonable.
Mm-hmm.
Um,
SVR of 3.2. If you're looking at.
okay, good. All right.
No.
Yes. SVR, simple valuation ratio, is so that's similar to price to sales, except we use market cap, not enterprise value, because we want to keep things simple. And we use annualized to make it more responsive instead of trailing 12 months. But if there's a company that has seasonal quarters, then we'll switch to trailing 12 months.
Yeah. Remember we saw that with, I think, Shopify, Olink, those where they've
Yeah.
got a big fourth quarter and then
That's
blank,
right.
I think. Yeah.
So our catalog average is now 5. I have to get used to that. I keep
Yeah.
saying 6.5.
It's been dropping.
Yeah, it's been dropping. So here's the revenue average run rate. So they can call that a run rate, of course. Yeah. Builders and scalers. Macroeconomic headwinds there. Okay, restructuring.
That is so we're working on some merch, and that's one of the t-shirt designs that
Yes.
we put together that I think it was Redbeard or someone in our Discord.
Yeah, it was Redbeard. That's right.
So shout out Redbeard. That was a good shirt idea.
Yeah, that's gonna. So I suppose we can touch on that.
Yeah.
Yesterday, we made some real progress on our storefront, and you don't want to spend a ton of time. It's going back to the point about spending all your time designing your logo and picking your domain, right? It's just silly stuff. The execution of the business is more important, but it's still a fun thing to do. And we do have some decent merch coming out. What I like about it is that we can also release stuff over time. It's fun, right? It's fun. And we're not going to make a ton of money selling shirts. I think we're actually going to price them as low as we can to make them accessible so that people can just enjoy the merch, right? But it's really cool. And I don't know why, maybe in the next couple of weeks, we'll be launching that. That'll be kind of cool. And once it's launched, it's done. And, you know, although as I said, we can have releases of different stuff. It'll be fun. So,
Yeah.
So this is just, these are key metrics to watch here. So look, learners, so they've introduced a new term, learners, less than $50 a month, builders, scalers, fine, right? That works. Yep. ARPU, so that would be across all of those. So this is cool, right? This is a good table here. This kind of sums it up. I was curious, Wyatt, and maybe we can just do that real quick, just to kind of put a little variety, some spice. Look at what their investor deck looks like. I like to do that. And what I'm looking for here actually is I want to see if they have net retention rate plotted over time and if that's dipping. You see, it's not here. Spending more than 50. Okay, so I'll usually just pop open these guys, right? The latest earnings deck. Companies that don't have earnings decks like this, that's almost a showstopper. You got to have something on a quarterly basis you could take a look at. Not that we even check in that often, but it's just the fact that you're forced to publish that data for your investors, right? The companies that don't do it, it's almost like, what are they saying, right? So what do we got here? We're reading this from left to right. Okay. Wow. I wonder if that cost cutting exercise is what jumped that adjusted free cash flow margin.
Yeah.
What is it adjusted? So I've just half of this is because I have to Google this stuff all the time myself. So operating cash flows versus free cash flows. Free cash flow is after you've invested back in your company. I don't know what the word adjusted means. Maybe that's what that means. I don't know.
Yeah, that's a very good question.
Large and rapidly growing market opportunity. We talked about that, right? So that's cool there. What's the problem they solve? That's cool, right? That's unpredictable pricing, curated set of offerings. And so, okay. All right. So all this is just marketing stuff, right? Okay, there's a breakdown of geography. And then there's that. There must be an acquisition there between Q2 2022 and Q3 2022.
Yes, that was the first one. That was the not Paperspace, Cloudways. Cloudways.
All right.
That was.
All right. What is this telling us? Anything new? Nope. This is the same stuff, but we can see wow, look at that consistent growth across all three of those categories. That's interesting. Balanced profile of growth and profitability. So you see companies do this. You see people talk about this, and it's rather, I don't know. They talk about, profitability. It's a big deal. With growth companies like this, it's just really important. They're growing as fast as they possibly can, and you harvest the profits later. That comes
Yes.
above all else, right?
Yep,
So when we
market
look
share.
at growth firms, yeah, it's a proxy for market share capture. When we look at growth firms, we're really interested in that revenue growth. We see here, it's kind of, that's their estimate. So that's probably what they're guiding to, right? So we see everybody else have a drop. If you're still at 20% growth, I mean, that's pretty good, right?
Mm-hmm.
Adjusted free cash flow. Shares outstanding. Look at that dropping down. That's kind of cool, right? I don't know what happened there, but
Yeah.
I guess that's better than seeing it go in the other direction. There we go. Look at that. That's what we want to see.
There we go. Yeah.
That's not good, man.
That's not great.
96%. That's really, really bad, because that tells you, and props to them for actually putting it in here. Not like,
Yes.
who is it that pulled us? Palantir.
Palantir.
That's
They hit
really,
it
really
tiny.
cheeky, man. You don't take out a key metric and slowly sweep it under the carpet because you don't like what it says, right?
Yep.
And that's literally what they did. And that's BS. You put
Yep.
that stuff out, you own it.
Yep.
These guys are owning it, and that's not good there, right?
No. And I think that goes back to our barriers to entry conversation.
Yes, sir, it does. And how easy is it for their competitors to? Is it? You know what an analogy would be? Is like the insurance company,
Mhm.
like insurance in the insurance industry, right? That's all those guys do is cut the same customers back and forth. You think about it for yourself, right? How many times have you changed your insurance company? I don't know. I during
Every
my
2
life,
years sometimes. Yeah.
something like that, right? So they're just swapping the same customers, and it's like that just starts to erode your margins because you're spending so much on sales and marketing trying to get your customers back. So once you have a customer and you lose them like that, it's not good, and it shows that their offering just isn't sticky, man. It's like, for us, Wyatt, I mean, we switched hosting providers. I'm not sure if you were with us when you were with us when we did that, right?
Well, that's a good question. I don't know.
Well, you weren't then, because you would have known.
Okay.
It was a big. We switched our hosting provider for cost, and our development team as well. So, and it didn't. There was literally nothing keeping us there except to say, well, we want we don't want to spend so much money as we scale. It's easy, man. It's not that tough. These guys have migration credits, so you sign up and they do the work for you. They make it really easy. So that right there, I mean, that's. Have you, or I don't think I have, Wyatt, seen a company that's gone below 100% net dollar retention rate recently or anytime?
No, there's some that are getting close, but
Some are getting close. Who's at
I
100?
don't know many of them.
These guys were at 103 back 3 years ago. Now they're at 96. Yeah, man. So they lost 4%. So what we're missing here would be gross retention rate.
Yes.
That would be useful. Though once your net, is this a true statement? If your net goes below 100%, that means you have to have a negative growth or a lower gross retention. Let's think about that. No, because you could still have customers. They just stop spending money with you and you're spending less. They just lowered their tier. So technically, that's why it's important to see both, right?
Yes.
Okay. All right. So let's keep going here. So yeah, that's a big problem there.
Mm-hmm.
Adjusted EBITDA margin, shares outstanding. That's weird. They're showing this metric at like 4 points in time. Is that, maybe why don't they just say quarters? It's weird.
Yeah.
KPIs. So they got their revenue growth. Wow. 16% there. Though what they're guiding to for the entire year is 20. I mean, it's still reasonable, man. It's double digits. Net dollar retention. There we see that, right? 107, 104, 96. Boy, that would be crazy if it went down to like kept going lower.
Yeah.
And what's interesting, so ARPU actually goes up.
I was going to ask what you thought of that.
Yeah. Let's try to think that through. So
I wonder if that is just implying that, well, maybe they're losing smaller customers.
Yeah, I think you're right.
Which would make sense. They're going to be the the least stable, the smaller businesses.
Yeah. Well, but we saw the previous numbers though
Yeah.
of customers. We didn't see that going down.
Yeah. Yeah. You're right. So
This stuff
I was just going to say,
interplays.
yeah.
Really interesting, right? This is the fun of analyzing these firms, is trying to figure this stuff out. But look, net dollar retention rate, existing customers spending less, that's pretty straightforward. Though I do wonder, what is average revenue per customer? How can that then be less? Maybe it's a lag.
And that's possible.
Look at, restate it to conform to our current definition of ARPU, which excludes testers. Yeah, better exclude testers, right?
Mm-hmm.
Excludes testers. Interesting. I don't actually know what that means, because excludes testers. Wow. So I wonder if that was restated. I wonder when. In other words, they changed the definition to make the metric look better, right? That's what seems like what they're doing there. I don't know. But at any rate, we don't like that lower net retention. This is just the appendix. I suppose, how much time we have left? 14 minutes or something, Wyatt?
Mm-hmm. And I was just thinking, they're, I don't think so. Like I said, they're not really a pure SaaS firm. So I wonder if that has something to do with it too, is the fact that they make revenues from their infrastructure as a service and their platform as a service. So maybe the SaaS portion is, I'd be curious to see whether that NDR is specifically for the SaaS portion, or if that's just a general overall.
Good idea. Let's see. Can we see the difference between revenue and ARR?
And that's the thing I was going to say.
Okay, so multiply this by 4. So what is that?
Hang on, let me make my screen bigger. I've got the comments up, so it's a little bit small. Okay, so multiply that 177 by 4.
Yeah. I should be able to do that.
About 700.
It's about 700?
Mm-hmm. Just over.
Well, there you go. So so that would tell you then that they don't have very much that's not.
Yeah, interesting.
I mean, technically speaking, right? That's I know that there's differences between the two, but interesting.
Yeah.
I was just real quick, just the housekeeping. Wyatt, we got 14 minutes left or something?
Mm-hmm.
Is that right?
Yeah, 13 now, but yeah.
All right, so we want to be cognizant of that. I wanted to do 2 things. One, just sort of see if there was anything else in the 10K that what was useful to look at. But before, and we can keep looking at that, but before that, kind of just summarize so far. When we analyze companies, we take a hiring manager approach, which means we're looking for red flags, right? So when you have a lot of great candidates, let's be honest, the stock market is full of great candidates, right? When you have a lot, you gotta dwindle that down, right? We can't invest in everything. Mm-hmm. So the same thing with a hiring manager. You really want to dwindle down the stack. The best, most effective way to do that is to start looking for red flags, okay? Or even more showstoppers, which is just something I can't get past, right? Yes. So for us, what are the things we can't get past? I think these more tactical metrics, that's fine. But starting at a top level, we like cloud computing, so that's fine. But we only invest in leaders. We're not sure if they're a leader amongst their peers, what the vultures and of the world, right?
Yes.
But even if they were, the hyperscalers are just too big of a threat.
Yep.
Yeah.
It's the giant gorilla in the room.
Yeah. So that's a showstopper from my perspective, is that I don't I don't think there's a lot keeping the hyperscalers from eating their lunch. If we were to go forward with this, right? If we were to dig deeper into it, what are some things we might want to find out, Wyatt? So I want to find out what their market share is compared to the other names they listed.
Absolutely. Right? Yep.
Anything else that's missing here?
Yeah, I kind of want to see, I think, I mean, I imagine AWS is probably their biggest competitor. So I'm kind of curious to see the differences between AWS's platform and DigitalOcean's platform, and see if they, are trying to offer anything unique. And because I mean, I know their niche is small businesses, but is there anything else that they're
Yeah,
doing?
but that's tough to then start going to product pages and doing comparisons
Oh,
without
yeah,
actually
yeah.
being a consumer. But I think accessibility
Yep.
might be right, and maybe that's what you're alluding to. Can I
Mhm.
just go to Amazon and plug in my credit card? And I guess
Right.
from a product usage perspective, we will typically try to find what somebody else says, right?
Mhm.
Instead of doing that work ourselves, and
Sure,
try
we're
to
not
and
no.
then when we find what somebody else says, we want to find another independent entity that said the same thing.
Yep.
So what's the likelihood that two independent entities came to the same conclusion and it's wrong? Lower, right?
Yes.
So I think that that's probably how we would research that, because I want the point of these to kind of be showing people how we do our research, right? And
Mhm.
this is how we do it. We dig into the 10K and we look at the things that we've been looking at today.
Yep.
But when we then go down and take next steps, we're really always trying to find somebody who's already done the work, right? We don't want to
Mhm.
have to reinvent the wheel.
Yep. Real
So
quick, I was just going to say we
yeah.
got a question here from Ramon.
Mhm.
Ramon Luis. He says, "Love your videos, learned and earned. How do you define hyperscaler in terms of growth?" For this, we're referring to the Amazon, Google, and
Yeah.
Microsoft Azure when we say
Yeah.
hyperscaler. So yeah,
Good question. Yeah, Wyatt's correct.
and
As
then
always. That's just I thought that was weird too. When I kept seeing hyperscalers, I'm like, what the hell are, what are you talking about?
Mhm.
I don't know why they call them that. It's just a fancy name they assign to.
Yeah,
That's it though, right? Wyatt, I think those are the only three companies that have that label.
that's a good question. Let me see.
I think that's it. They just call those three companies hyperscalers. I don't know why. So it's
Yeah, it's
nothing.
those three.
And I know the word implies, hyper growth, hyper scaling. I think it really even has anything. It's just, they call them hyperscalers, man. That's it.
Mhm. And we got another comment here. Thanks for making me realize right now that I'm more of a speculator than an investor. That investors can't invest in certain startup stocks. Great content. Keep it up. Greetings from Switzerland. So
Awesome. Well, that's great. Thank you
from
for that.
Switzerland. I like your username. That's cool.
That's awesome. I recognize that. So it's great, I think, to have these. So since we just have 6 minutes left, I was gonna mention something, Wyatt. I thought this would eventually come up. So in terms of doing these in the future, I enjoyed this. I think it was useful. We'll see how well it works for everybody, and what sort of participation. And look, the people that I work for are the people who pay our bills. Okay. That the premium subscribers, that's who we focus on. So they've decided that we ought to do this, and then they're going to consume it, and they'll give us feedback in Discord. If that looks good, right, then we'll probably do more of these. And, the way it works is that I'll sit and myself and Wyatt will sort of brainstorm and figure out what we're going to do. And that happens really quick, right? So I think this was engaging. It was enjoyable. So if we do another one of these, we have a polls channel in our Discord server where we put up companies for people to vote on, people that are paying us money. And they say, yeah, we'd like you to cover that. This came up. They said, we want you to do a 10K live. So we'll probably do another one of these. And my limitation would be high bandwidth. So when I have access to high bandwidth, then I try to utilize that as much as possible. So we may just, so that's kind of the cadence of these, right? It's just
And you
based on
mean
whatever.
literal bandwidth, not time. You mean
Yeah,
actual
yeah.
internet
Thanks for
bandwidth.
clarifying, Wyatt.
Yeah.
I mean literal bandwidth. So I
Yeah.
travel a lot, and a lot of times I don't have good access to bandwidth. You need pretty good bandwidth to do these. So I got 5G here, and you kind of have to have that. Otherwise, it's not a good service to offer somebody something shoddy. So that's in terms of the cadence. So I think we'll do more of these. What we're probably going to do, and this poses a little bit of a problem, and I wanted to quickly talk about it. What we were thinking is for people that are subscribed on YouTube. So YouTube has two subscription tiers. There's a join that we just put that up. It's, $1 a month, support us, join, and people join, right? And they pay $1 a month. That's very nice of them. We want to give them some utility for that, right? That's the low tier. The second tier is a Discord membership for $5 a month, which we thought was a good way to allow people to kind of get insights into our community without having to, pay for the entire subscription. So there's those are the two subscription tiers on YouTube. Now, we don't like those because YouTube takes 30% of our money. And in return, we get a bunch of Muppets that can't control the comment section. We have to spend all our time moderating comments because there's so much garbage out there. So I'm not a big fan of that. But that's an option. Now, what we were thinking of doing is the people that are paying us $1 a month, they should get something. Maybe it's the ability to comment on these. And the problem there is obvious. So we've got Redbeard. He's a paying subscriber. He supports our company, and that's who we work for. But then we're telling him, hey, Redbeard, when you come here to comment in this section, you got to pay us $1 a month. That's kind of cheeky. We can't actually tie in our subscriptions because we have our website, and that's where our subscription product. We're hosting our own subscriptions. We're not going to be reliant on some third-party provider. That's not how you scale a business. We have our own subscription offering. We can't integrate that with YouTube in that direction. We can do the other direction. We can say, yeah, if you're paying us, $5 a month on YouTube, here's access to Discord. So they set that up. Going the other way, we can't do that. We can't say, okay, people in our Discord, you have, automatic access to these things in YouTube. So what will probably happen, or what we're tossing around the office, is that we'll say, okay, we'll maybe do 1 or 2 more of these, or maybe even the next one, say, okay, if you want to comment, you got to be paying $1 a month. And that kind of filters out, people that are supporting, right? It's useful. It sort of works, right? They get some utility for that. So we're thinking about doing that. And as I said, the only problem there is that but that's not a lot, $1 a month, right? So I suppose we're just going to have to cross that bridge when we come to it. But I wanted to talk about that because that was our plan, right? Is that when we start doing more of these live presentations, you got to be supporting us, right, to engage. But what do you think, Wyatt? Is that a fair description of where we're sitting with that?
Yeah, and we can even, if we want to have maybe something on Discord where if we have premium subs who aren't YouTube members and they want to comment, we can have somewhere in Discord where they can say something, and one of us can mention it on the stream. I can say like, hey, Redbeard just said this in Discord, something like that.
Wyatt, great idea, man. So I guess we could have we could just do a channel in there that says YouTube banter or something.
And then when we're doing these lives, they can go in there and we'll pull it up.
Yeah. You solved. I think that solved the problem. So, but at the same time too, I think encouraging everybody to engage and chat is also useful. So as any marketing person would say, we get this going, we get some momentum behind it, and then we start locking it down, right?
Yeah.
So
we did. Sorry, I didn't mean to cut you off. We did get one more comment here. Terrestrial Access Network. Just clarifying, it's saying that DigitalOcean is not a hyperscaler. True, they're a hosting provider. True, they don't spend nearly enough in capex to compete with the 3 big cloud players. Sure, yep, and won't ever have that. I use them and I love them though. Easy to use. I think that's their selling point, is that they're easy to use. They're for the little guys. Yeah.
Thanks for that. You know what's really nice about, they call it the network effect, right? Is that as we get bigger, the more people that participate, the more likely we get subject matter experts and we get comments like this.
Yes.
And of course, the problem there is what I've found. So, my first half of my career was in software development. The problem with developers is that they get very loyal to a particular offering, and then they find themselves not being completely objective, right?
Right.
But as a rule, or at least in our Discord community and what we've seen on YouTube, even our channels and our commenting section there, these people aren't paying any money; they're just contributing. Bigger you get, the more likely it is somebody can step in and provide valuable comments like that, right?
Yes.
That everybody benefits from. And the fact that we moderate our comment section heavily, I think that's a competitive advantage, because then, this stuff ends up on these videos and it's just extra stuff that, offers insights to people. So thanks for that comment. Thanks for everybody that has an opinion about this and then says it. It's really useful, right? And I think this is working good in terms of this flow, right? People raise things as we're going through this. Is that all the comments, Wyatt?
Yeah, that's everything we got.
Okay, cool. So, I think we can probably wrap this up then. We're going to do
just got one more. Here we go.
Yeah.
Right up the bell. I personally usually, this is Spy v Spy. I personally usually more of an observer than an active participant, but I like how clean the comment section is. No nonsense, no rocket ships, no moons. I hope to see more videos like this. And
Yeah,
we got
totally.
one more. Eric says, I love Nanalyze and the content you guys put out. Super digestible, good, and great content. Thanks for doing this.
Oh man, the guys, we really appreciate, it isn't just your wallets. It's the kind words that you say that honestly, it's a slog a lot of times. We deal with a lot of
Yeah.
crap on YouTube with trying to police these comment sections, and YouTube is just a nightmare, right? But it's worth it when we hear things like that and the people appreciate it. And that's how you scale and differentiate yourselves, right? As a business. So really appreciate that feedback. It's really encouraging. And a thanks to everybody on this call that is a premium subscriber. So that means they've, gone to our website and they've subscribed to a plan, whether that's monthly or annual, and they support our business. I mean, YouTube is a small part of what we do. A lot of the time that me and Wyatt and the rest of the team put in is building, maintaining products for people that pay our bills. And a lot of that is in our written, research and our tech stock report, our 460 tech stock catalog, the new money report, our trade alerts, our article summaries. So we do a lot, and this is just a small piece of that. But I hope it gives you an indication as to what the rest of it looks like for those of you that aren't subscribers, and that for those of you that are, thanks so much. You let us do what we love, me and Wyatt and everybody else on the team. We truly love this stuff, and I hope that shows in our passion around technology investing. So I think that's it. Anything else, Wyatt?
Nope. Redbeard says this, so thanks, Redbeard.
Yeah, awesome. Thanks so much, everybody. Really appreciate it. Wyatt's going to click close, and then this will go up. Hopefully this will record it, and our first live stream is done. It was fun. Yeah. Thanks so much, everybody, for attending.